Hello, can you guys hear me? Just a second. Just a second, guys. Hi, everybody. Can you guys hear me? Are we audible? Amazing, amazing, amazing. Okay. It's good to see you guys again. It's good to see you guys. This is another Exness live session with me, breaking down the chart, going through the market. The last time we did this was last month, somewhere in March, when I was in London. But can you believe that today I'm no more in London? I'm actually joining you guys from Ghana. The next time I could be anywhere else. Yes, I'd like to know where you guys are watching from. Comment where you're watching from. It'll be interesting to know where you guys are watching this live stream from. Where are you watching me from this morning? I'm curious to know, actually. From Ghana, from Nigeria, Zimbabwe, Uganda, Cyprus. That's insane. That's awesome. That is awesome. It's quite early here. It's quite early in Ghana. You can see it's showing clearly on my face that I just woke up not so long, but for the love of the community, I gotta be here. Right? Last time, you remember how we're breaking out the charts and everything that we literally spoke about came to pass, right? Remember how everything we discussed in our previous session literally came to pass, and I'll show you guys. I'll show you guys on the chat, and that live stream is still recorded and saved here. So it will do you good if you just joined us, perhaps for the first time, to visit Exness channel, and then get to see for yourself, the magic that we actually did from here. So we are here again. A lot has happened on the market quite recently, so it's just about time we watch the market again, and then see what we can discuss and look forward to in the market, right? I quite remember that one of the most instrumental pair that we're watching those times, and in discussing that where is it likely to go, was gold, right? And if my memory serves me right, I think we were particularly on the daily time frame, somewhere still around the still around the probably 26,000, 27,000, and I gave my bias that gold is likely to hit 30,000. Everybody should keep their eyes on it, and lo and behold, that was the first time gold ever hit 30,000, and so many people that followed that made a lot of money. Today gold is literally around 32,000, 33,000, right? So we will probably also analyze and speculate where gold is going to go from here as well, right? What instruments would you want me to break down for you guys today? If you have any particular interest in any instrument that you say, oh, Kojo, can we watch this today? I don't mind. You can tell me, I'll watch it for you as well. Gold, everybody wants me to analyze gold for them. Okay, no problem. GBP USD, gold, Euro USD. We'll go through all of that. Okay, now that we're already on gold, it's just fair enough to start delving in on gold, right? Now with gold, you guys know I like to always plot my psychological levels on gold. I've been doing this, if you know me, since time immemorial, right? And my psychological levels is just basically picking out the round figures around gold in 500 pip differentials, right? And I've been doing this like for so long, right? So if you see 3,200 to 3,250 on gold, that's not 50 pips, that is 500 pips, right? So this is how I will usually mark up my chart before I trade gold. So you can see I picked up 3,200, 3,250. Then what else? You can tell me in the comment section. After 3,250, what do we go? After 3,250, where do we go? I'm waiting on your answers, guys. Somebody say we call it a Cortes theory. It's a little bit different. It's a little bit different from the Cortes theory. Three 300, 350, and then maybe we'll just end off at 3,400. So other than that, I can come down here and then put up a few lines below as well, because these are still current in the market, right? So we can do 3,150 here. I kind of encourage all of you, especially with gold, to mark up your chart like that. It's very helpful, and it lets you see a lot. It really lets you see a lot. 3,100. So we'll do that quickly, and then let's do that quickly, and then now we can talk about the market itself. 3,050. Then we have 3,000. Then we can also have what? 2,950. Yeah, so you can see it's pretty even, right? And remember, I'm watching this on the daily time frame. If I switch this on the 4 hour, then you begin to even see things even clearer, right? So on the 4 hour, you can see what gold has been doing, right? After that huge rally on the upside, where did it potentially hit or intentionally hit? 3,150, and everybody thought this was where gold was going to peak and then start dropping heavily. From there, it just came to trade around, 2,950, and suddenly, currently, it's heading towards what, 3,300, right? So if you've been so adamant with shorting gold, then I think that you're doing yourself the worst favor at the moment, right? So you can see with that huge rally that took everybody by surprise, this is exactly where gold also hit what, 2,950. You can see how like the psychological levels are so attracted, or the market, let me put it this way instead, is so attracted to the psychological levels, not the psychological level being attracted to the market rather being too attracted to these psychological levels. It's only fair that I add a few more down here. 2,850, and you can see, right, what are you guys seeing? What are the real magic you're seeing? And those are the regions, right? So for when I'm trading, I'm only looking at like some of these key factors, right? I'll explain them to you now. I'm looking at number one, the market coming into in fact, let me make it big a bit. so that some of you can see it properly. Let's say 22. Okay. Right, when I'm trading, I'm looking at the market coming. I'm looking at first market structure, then I'll look at, you know, my volatility ranges, which would have to do with my demand or supply zones, either words, support and resistance ranges. Then I would also look at, I'll definitely factor in my trend lines, which will predetermine the trend for me succinctly, and I'll show you what happened with gold in terms of that trend line logic, and then my Fibonacci as well. But I don't ignore my I don't ignore my psychological levels. Right? Then the other aspect that I'd add is what? My fundamentals, right? Which will have to do with interest rate, unemployment rate, inflation rate, which is the CPI that everybody likes to trade, and then the last one is what? GDP, which is the gross domestic product, right? Then one thing that most people also tend to ignore, which you can't ignore in this instance, is geopolitical events or happenings. You get me? You see how I just summarized trading for you? If I were you, I'll write these things somewhere and start building my knowledge in trading around these key and core concepts. If you somebody saying something is wrong, am I the only one who can hear? Is my sound good though, guys? Let me know if we're getting the sound good, because I think it should be good. If the sound is not good, I don't think it's coming from me, right? Sound should be good. So if I were you, like I said, yes, I love this person. He says that, what about candlesticks? So we'll put candlesticks here. That tells me that you guys are learning. Candlesticks confirmations. I'm proud of that person that said, what about candlesticks? Who's that? Chris Benfo. Chris, how long have you been following me? I'm sure this person has been watching all my videos and following my trading strategy, perhaps even in the community. That's good. That's amazing. So yes, this is the summary, guys. This is like, I tell you, you've known me for, okay, and maybe another bonus, right, that I'll add here. Number 7 bonus is what? Chart patterns. Don't play with that. Don't play with that. Don't play with that. Right? I'm following your comments. I'm reading you guys. I'm reading your comments. So you can keep the comments coming in. Right? You can keep the comment coming in. What you are learning. Are these concepts that I mentioned here absolutely new to you? You can let me know. Right? But you can see. Just a second. Let me plug in my charger before this laptop dies on us. Right. How is 7 different from 1? Market structure and chart patterns, they're absolutely different. Absolutely different. Like they are nowhere close to each other, right? Somebody say and channels. I don't really trade channels, right? I'd rather focus on market structure to define channels, right? Because if you draw a channel, whether you're drawing it in a diagonal manner from the bottom to the top, or in the same diagonal from the top to the bottom, all you're doing is you're just calculating higher lows and higher highs, right? So what do I mean? Let me show you a clear example. Let's say you pick a pattern that goes from here to here like this, right? And then you pick another pattern. In fact, let me draw the pattern first. You pick a market that trades like this and comes like this and goes like this and comes like this and goes like this, and then suddenly you say, okay, this is clearly representing a channel. So you connect your lines like that, right? Connect line 1, and then you connect line 2 like that, right? And you say, okay, I'm going to be trading this market within this patterns, right? Do you know all you've done? You've just literally picked up a perfect way for you to illustrate your highs, Can you see what I'm already showing you? And then what? Your lows, and then what? Your higher high, and then what? Your higher low, and then another higher high, higher low, like that, right? So isn't that market structure, right? Then in that sense, you'd rather be well off using Fibonacci to be picking those ranges, right? You'd rather be well off using Fibonacci to pick like from range 1 to range 2. You can see swing high retraced into the 5061.8 and then took off to the next one. So for the person that asks that, is market structure not the same as chart pattern? Not entirely, right? And for somebody who's also considering this as a market structure, right, then they could possibly call this a rising wedge, right? But it will only qualify as a rising wedge if the resultant effect of the market, or the preceding trading of the market, was coming from the top like this, right? Where you kind of expect the resultant effect to break out on the downside like this, right? Then you say you have a rising wedge. If you understand what I mean, right? It's very important for you to understand these, very basic but important. But imagine that the market was actually trading just a second. Imagine the market was actually trading from the top like this, right? From the top, it connected like this, and then you had that pattern. Then you cannot necessarily call this one, a rising wedge pattern, right? Because you cannot be confident to tell that the resultant effect is going to like break out onto the downside like that. Somebody say ascending channel. So when it comes to like patterns, right, and all of these channels, there are like several names. You can give them several logics around them, and there are a lot. So you don't want to always just conflict yourself with one thing to the other, and then suddenly you're lost in the middle and you don't really know which concept to apply. So stick with one, right? That's the best, and let it rather make sense to you. So for me per se, like I explained in a more open-minded way, channel is not like part of these lists. So it will be like rather market structure for me, volatility ranges, trend line, Fibonacci, psychological level, candlestick confirmation, very important. Then I like to also take a key look into my chart patterns when they appear on the market. Then I keep my ears on the ground for the fundamental events, interest rate, unemployment, inflation, GDP, and geopolitical happenings. You can see what is happening with China, US right now, throwing shades and bombs at each other with the trade war. And the trade war is what is actually fueling gold to trade like this. If you knew it or not, the trade war is what is fueling gold. So anybody that has just had their guns on to short gold, you're strangling your own self in the market now, right? This is absolutely not the right time to dream about shorting gold. Because why? Who can tell me 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 why this is absolutely not like somebody said gold can touch 300. It's already touching it, basically, you know, like from where it is now, it's barely what pips. If I come to the 1 hour, it's barely 70 pips. 70 pips for gold is just one stretch. So I was asking that who can tell me why gold, this is like absolutely a wrong time to dream about shorting gold. Uncertainty is one, you can put it that way. The geopolitical happenings, right, is still at its peak, right? China, US, there's no settlement. There's like a lot going on with the two countries. Currently China has imposed about 120% tariffs on US goods, and the US has also imposed about 140% tariffs on Chinese goods being exported into the US, right? Now when that happens, like I said, gold would react in this manner because it is a safe haven, right? Investors, when they are panicking, when they are not certain about what is supposed to be happening on the exactly, this person Adeleke just said it, it's a safe haven for all investors, right? And you can quite see what happened. You can quite see what happened with even the indexes, right? When I say the indexes, I'm talking about the US 30s and then the Nasdaqs, right? You saw what happened with them when all of these things were going on. Insane drop, lost a lot of value on the market, you know. And the XY, you saw what the XY was also doing, just dropping, like, you know. And when what happened, right? So most people did. I'll show you something on the chat now. Let me show you here on Nasdaq, right? Take this US tech, right? So you see US tech here, right? When all of those things were going on, you can see that huge drop all the way from the top, right? All the way from the top here all the way down here. That was when the intensity of the tariffs, in fact the real intensity, started from here, started from this range, right? And I want to show you some technicalities around that side, right? You can go back and watch, you know, backdate this date to like the first announcement of Trump with the tariffs and all of that. There were already speculations here. That was why the market had already priced in, which just started dropping even from here, right? And then this level right here, it's not a random level, right? This level here, it also is sitting on a previous volatility range, right? You're only going to see that when you come to, let's say, the daily time frame, right? So you can see here like this. You can see from here. I'm sure you can see, right? Let me just put the horizontal array there instead, right? So you see a major level, pullback, continuation, and then when the whole shock waves setting on the market, where did US 30, which is US 100, which is the US tech, decide to settle down on here on that same level, right? So settled here, pulled back up, created like that double bottom type of a pattern, right? You can see here, hit here, go back up, come back there, and then this very day, right, with this push up here, who knows what happened? Who knows what happened? I don't think a lot of people really understand, so I'll explain it so we don't waste much time. What happened is that after Trump had imposed all the tariffs, there was a lot of like backfire, you know, in terms of the logics, and so he released or removed some of the tariffs, especially for the US goods. He started removing tariffs from tech products, mobile phones, computers, and all of those things. And then the market suddenly just reacted to that positive news, right? So if you watch some of the commentaries, right, this is from analytical point and not a political bias point. People were saying that it looks as if there's a lot of insider trading going on with the White House at the moment because of like all of these type of movement. You know, you raise tariffs, next minute you pull it off, next minute you raise it again. So people are accusing, allegedly, you know, the White House of, you know, pulling some shady moves in the market. But you know, who knows? You and I cannot entirely explain that. But what we can do is we can follow the footprint of what is happening in the market to make a justifiable decision to trade in a manner that will favor us, right? So talking about chart pattern, then you can clearly see what after this rally here, the market has been trading sideways, and one of the most beautiful chart pattern you could have observed from here is this, you know, triangle pattern here, right? And you can see that what this is more like an asymmetric triangle. So what happens with asymmetric can either break on the upside or downside, and clearly you saw that what we've had like a little bit of break on the downside. So it could have been a quick day trade, scalping, give you some quick profit, but you know, US 30 and NAS 100, they are extremely, you know, volatile at this moment. So you want to trade them, trade with extreme caution and cautiousness, right? But at least up to now, I've broken down the logic of what is happening with US tech for you in relation to, you know, the geopolitical event. So we should quickly switch back to gold again, because that's like the order of the day, what a lot of you have been waiting for. What I'll do with gold, remember that I said that one of my principles in trading is what the trend line, right? Sorry, in considering the trend line, you can see that what we had a very classic, you know, the touch of the trend line going on here, 0.1, 0.2, and 0.3, right? Can you see that here? This is like the most absolutely beautiful, you know, touch of the trend line that I've always been speaking about, that you can get with an instrument like gold, right? I'll zoom in briefly and then you see the details properly, and then you see how this was super easy to trade, right? I still have some positions on gold, by the way. Swinging, excuse me excuse me guys, swinging all the way from down there. So you can see, right? Can you guys see? What can you observe here? 0.1, then we can move on to what? 0.2, and then 0.3. Right? 0.1, 0.2, 0.3. So 0.3, what do you observe happening here? The first interaction that we had on the market was this line here, right? And remember that when you go to my trend line strategy, I tell you that anytime we have the first interaction, just mark up that line there on that first interaction. And what you want to observe is that no candle should close solidly beneath this range. And this is a concept that I've shared for how many years now? God knows, probably 5 years publicly, right? I used to trade it privately until my good nature decided to share it publicly, right? So what do we observe going on here? We can see more like a minor head and shoulder going on here. Left shoulder, head, then the right shoulder, right? And then it broke off, and suddenly the market has just been trending and trading upwards. So here, if you had the first interaction, obviously not the best for you to find any entry. The second one, if you had even had confidence in taking your entry around here, which means that you'd have put your stop loss, you know, beneath the range like that, maybe beneath the candle or beneath the wick, and then your target profit is even this high here, you can imagine the insane risk reward that you'd have accumulated for yourself, right? And if you have so much ambition to even like speculate even the most, then you have like, you know, which is unlikely for most of you, because I don't know, a lot of you are still in that inexperienced manner of not having the confidence to hold trades yet. And the other time somebody was asking me that, Kojo, how can I learn the skills of holding a trade? And I think I did very well with explaining, you know, to them. I did very well with explaining to them how to hold trade, and I said that the only difference is you putting on a risk size that you can accommodate. And once you put on a risk size that you can accommodate, then you'll be extremely comfortable to hold a trade for 1 week, you know, 1 month, 1 year. I have a friend, right, who at the point where gold was trading at 1700, right? After this live session, I'm going to post that video for evidence sake, right, on my Twitter. I mean, not my Twitter, on my Instagram. So follow me on Instagram, KOJOFOREX, right? So when gold was trading at what, 1700, just around 1700, this man, he was still very young in his trading era. You know, when gold was 1700, like the last time was probably like 2019, 2020, there about pretty long time. Most of you had not even started trading yet, right? Then he was still struggling with trading until like, you know, he had managed to gather 10,000 rand. This friend that I'm talking about is a South African, so he managed to gather 10,000 rand, right? 10,000 rand, right? Now, what he did when gold was still trading around 1700, he said that, look, I was almost using a bad word, but it's okay. He said, F it. What he's going to do is going to put 0.01 lot size, right, on that position on gold, and the 10,000 is his risk, right? That's if it blows, and he's not closing that trade. And can you guys believe that for 4 years he has not closed that trade? 4 to 5 years already he has not closed that trade. And then the 0.01 is making currently a profit of almost 40,000 rand. The 0.01 is making a profit of almost 40,000 rand on the 10,000. So we were making joke, and we were saying that, what if he put even 0.1 instead, or what if he put like 1 lot instead? You know, then you can imagine that like the profit would have been, you know, enormous. So the only reason why he felt comfortable was because what, the 0.01 was not going to hurt the account in a manner that will suddenly start letting him panic, right? So I always recommend and advise you guys that if you want to learn how to like hold trades and then be comfortable and do these things back to back, then you want to, you know, start with putting in small lot sizes, you know, putting in small lot sizes, and then practicing, leaving it. But what is most important in those type of gameplay is your entry, right? Because imagine that even he put 0.01 and then he got the entry wrong, then you suffer crazy drawdown. He might probably get discouraged and close before the trade materialize. That's why all the concept that I'm teaching you, I also emphasize on getting the precise entry. And you can see here that this is an example of a precise entry, right, on gold, precise model entry on gold. And if you had this precision on point, right, if you had this precision on point, like, you're barely going to suffer any type of drawdown that is going to wreck your account, that will steadily start letting you panic to want to close and all of that. So now that we've talked about the historical movement of gold till we're looking at the present now, right, then it's only enough to start talking about the future, right? It's only enough to now look into the future. So that's how technical analysis should be broken down, right? First, you look at the past, right, or historical charts. Then you look at the present, which is like what is happening now. Then you can now speculate on what the future. Always have these three things, or three simple processes in mind anytime you're breaking down the chart. And then breaking out that past is what I've done with you guys, analyzing the tariffs issue, bringing in the Trump and China, backdating it, linking it with, you know, the Nasdaq. That's, as I showed you, opening up the theta trend line. Some of you didn't observe that there was even a classical one as such like that. And then the present is currently seeing that, okay, gold is literally almost hitting the 3,300 mark, right? And then the present also emphasizes the fact that the China-US trade war is still ongoing, and then no real deal has been settled yet. So we cannot underestimate like the potential of where gold is absolutely gonna go, right? So once we understand these stuffs, or we're on the same page with this, right, then the present is that the most tricky part of any technical analysis, right? Should I tell you guys? The most tricky part of any instrument is when it has not traded any particular price point before. So as we're here, see, our generation, we have made history so many times, right? But we don't realize that we are living in a moment of historical happenings, right? Do you know that there were certain generations, right, that traded within a bandwidth of a price range that had already been previously traded? So no new highs were ever created and no new lows were ever created. Does it make sense? This is philosophical, but hopefully you understand. If you understand, let me know if you understand. You guys are not engaging in the comments. It's like you're just quiet and soaking in. It's good though, but at least being engaging is also fun, because I'm reading your comment here. Do you get what I mean though? Or I should repeat? If you want me to repeat, let me know if I have to repeat. But if you got exactly what I said, let me know that, okay, you guys understood exactly what I meant as well. Because what I said was that we're living in a current dispensation where there's just history all around us, but people are failing to realize, because most of the instruments that we're trading now, they are making either all-time highs or all-time lows. But there were certain generation that traded, and then they were trading in the mid-range, right? There was really no all-time high or no all-time low. So as me and you guys are on the market right now, this morning, right now, right, history is happening, because gold has never traded to 32.90 before, and it's happening now. It's happening like right before our eyes, and it's going to be in the history books that in the year 2025, on 16th April, for the first time, gold hit 3,300, or gold hit 3290, and it's history. It's going to be in the history books forever, right? But let's say gold was trading even just here, right? You see, I just broke my chart, right? Let's say gold was trading here. This is not history. Why? Because the record is going to have it that on 2nd April, gold already hit 3,150. So if it's coming here on 10th April, it's just a repeat of history. Do you get the difference? I just used this simple example to show you, because here was the very first time that it hit 3,150, but here it's not the first time. It's probably the second time. So this is what technical analysis is about, that historical price patterns and speculating that it could happen in the future again. But nonetheless, with this particular one, it didn't happen like that. It just broke off and went off. That's why that's how come the checklist that I gave you is important, right? Because one of the important part of the checklist was the candlestick confirmation. And here you can see that for the second time, when gold was coming there was no candlestick pattern that was informing us that it was going to reverse around the same 3,150. So there was no point, absolutely no point in expecting gold to drop here. If you started shorting gold here, then you are more like the most nicest word I could use is a rookie in the market. Like you saw gold here, and then you started like shorting gold here. Imagine that you were selling gold here. I know some of you did, though you don't want to confess. If you're here and you sold gold here, tell us the truth. Let me see in the comment. Did you sell gold here? Was anybody encouraged to sell gold here? Be honest. Being honest won't cost you anything. Did anybody see this setup as very viable and legit and say, wow, gold for the first time hit 3,150, and then it has come back to that point, so I'm going to sell here? I'm waiting for your comments, guys. Who sold here? Don't lie. Tell us the truth. You see, I have some honest people here. God sees all, man. God sees all. Man can't. I'm sure he's only confessing because of his name. Because he knows that if he does not confess the truth, God is seeing him. Says God sees all. Man can't. This is my first time hearing such a name. God sees all. Man can't. So yeah, he knows that God, not only him saw the chart. All of you that are laughing, you fell prey to it, but you are failing to confess, and you're just like laughing. We are very many. You're very many, right? Very many that fell in that trap. So many people, but from what I'm teaching you, I don't want you guys to ever make like those mistakes anymore. In situations like this, you want to particularly see like the candlestick patterns, the resistance reversal formations. You would have like the shooting star, the hanging man, the tweezer tops, the mornings. I mean, this one particularly be evening star, the tweezer tops. I've mentioned literally all the confirmations that you need to see in confluence around this range, to make a trading decision. So you should probably be writing them down, giving you all the juice for free, right? Sponsored by Exness. So you should be grateful. I mean, say they miss my personal content. Don't worry, I'm piling up some content for you guys, right? But I hope you guys understand what I've shared here. You want to see like the patterns building up around here, right? And then once you see like that clear patterns that I've mentioned, then you can jump in, entry, put your stop loss above the range, and then you would have expected the market. But seeing the market glaring like this, right? You know what you're doing at this point. If you take a sell, that's what I call jumping in front of a moving train. Go on YouTube and watch clips of people jumping in front of a moving train and apply it to the concept of the market and it will make the absolute sense. You will never make such a mistake again. Just randomly, when you have your free time, just say, I remember Kojo saying I should go on YouTube and watch people that jumped in front of a moving train. So imagine these candlesticks as moving train. You know how momentum of a moving trains cannot abruptly stop like even the way a car would, right? This webinar is not a financial advice or solicitation. Neither the presenter or Exness take responsibility for your financial decision or guarantee the accuracy or completeness of information. Past results do not indicate future performance. Consult an independent advisor if needed. Risk warning: CFD are risky, complex derivative traded off exchanges. I'm reading the terms and conditions for you. I'm only giving you guys my bias. You do not want to regard it as a financial advice. Make sure you do your own research and come up with your own financial decisions. So yes, if you understand me, like I said, I was relating it to the fact that this is a moving train and you'll be crushed. Exactly, somebody said it. You'll be crushed, if you stand in front of a moving train, right? So for anybody that was crushed, it's like a typical example. Breakthrough and never look back, and then you're just there crying about your money, but the market is gone already. So this is where we find good. And then what I wanted to share with you is with what is happening now, right? The most important part of what I'm sharing with you, right, is here. Now pay attention and listen carefully, right? Anytime we have all-time high, the only time a trader can anticipate, speculate, and potentially be right on the peak point of a new all-time high is when they particularly understand two things. And then the first one is psychological levels, and then the second one is candlestick patterns. If a trader don't know these two things, they can never call the tops of a new all-time high. Never forget this one. Did it make sense? Let me know if I'm speaking some wisdom to you guys here or it's like gibberish. I said that anytime the market is trading in an all-time high, there's only two ways that a trader can call the tops of that all-time high. And the first is if they understand psychological levels, and then the second is if they understand candlestick patterns. If they don't understand these two, they can never call the top, because you don't even know where the top is. Now see, when I hide this drawing tool here like this, then you don't see, you don't even have any understanding of psychological levels. You don't even have any understanding, and then gold is at all-time high, right? The thing with all-time high is that, see, when I come to, like, let's say the weekly time frame, right, and then you're watching from the left side, right, there's no technical analysis on the left side for you to make any judgment or decision on, because price has never traded there before. In fact, let me come to the monthly, then you understand in essence what I mean. Watch here. There is nothing that has happened here before. Nothing. Absolutely nothing. Okay, I just used a tool, so that's how come it came. But if I click back again, can you clearly see? Nothing. You can see the charts. Gold chart is looking like crypto, just making higher highs like that. So how can you then, with just a limited information and knowledge and perspective, be able to say, oh, this is the right time for this to drop from here? You will be squashed. You absolutely be squashed, right? The only thing that will favor you is when you have a perspective like this, because then it reveals a lot to you, right? Suddenly the market becomes meaningful, right? Such that if you didn't know anything about this, then your best bet would have been just to keep buying onto the market. But if you're buying, you still have a little bit of con, right? The pros is that you're trading with a trend, but the con is that you would sometimes not even know where to take profit. But when you have this, then you know that, okay, even though I'm just trading blindly without this, but now with some level of perspective, even if I'm buying from here, then gold has potential to hit 250, and if it breaks 250, then it's going to trade 300. That's a good perspective to, you know, start analyzing or being an expectant with a speculative market like gold, right? So with all that I just said, the summary of it is that for us to find potentially any setup on gold, right, it's either we're probably scalping on the lower time frame in the direction of the market, which is like looking forward a quick buy to in expectation that gold would trade up to the 300. But if we're relying on our usual swing, right, then what we want to do now is leave everything out, right? Leave everything out and wait here at the 300, right? Leave everything out and wait here to start and observe if we're going to have like some candlestick pattern. Maybe have some, you know, evening star pattern forming here. We have some shooting stars, we have some tweezer tops. You know, once we have all of these patterns, right, then we can speculate. And even that one, it has no guarantee because there is no historical evidence to it that gold ever stopped at 300. So it would only do you good to risk minimally in situations like that. It will only do you good to put on a risk size that you can accommodate, right? And I've actually traded in this manner before, right? I'll show you that instrument that I traded, and I had a lot of people asking me, Kojo, how did you do this? How did you know that gold was going to, it was not gold, it was actually US30. How did you know that US30 was going to reverse from here? Later on I showed them though, right? But let me show you guys for educational purpose, right? So that was like US30, and this is like so many years ago, right? So many years ago that I did this. So some of these things that I'm showing you, I've applied them so many years ago. You know, let me come to like the daily time frame. I'll show you guys quickly with that one, then we move on, right? I think that entry was somewhere around here, was it? I should think so. Let me see, 36,000, 37,000 thereabout. Can you already see? So I used to break, and I still do, break down my chart on Nasdaq as 36, 700, 37,000, like that, right? And for the first time in history, it had hit this level here. It had hit this level here, right? Oh, the chart went all the way back. Okay, so yeah. Can you guys see now? Can you guys see? So let me just switch back to the 4 hour. Or you can't see. Oh, because I switched back to the 4 hour, the whole thing just messed up. But let me just back to the daily time frame again for illustration's sake. So for the first time in history, that was when US30 had ever hit here, right? And I had marked up my chart and I saw that, okay, it hit 36,500, and I started reading into the candlestick pattern there, right? Then I took my trade entry here, right? Very beautiful sell setup. Put my stop loss above the last high of the candle, and then my take profit. I anticipated that I could get like first potential take profit around here, right? And then the second one could possibly come down here within this range, right? First time ever in history. And I took that speculative bet and see what happened. Beautiful, beautiful display of accuracy. Came down, traded, smashed down, and then eventually came back up there again. You can see, right? So everybody's going to wonder, because like this is the first time the market ever came to that level. So how can you tell that it was going to drop here? That is the nugget that I'm giving you guys for free today. That right now with gold, nothing is ever showing there. It has never happened. So all we got to do, wait for it to specifically hit that, that key level there, right? Specifically hit it. We start observing the patterns around that range, right? And then once it makes sense, then we can put a little bit of a bet on there, right? But the beauty is that where I can tell you that in trading, you've probably heard me mention it for once. I say what go for the jugular is a situation where we had like indeed this one, proving itself to be a reversal range. It comes down like this, right? And then guess what happens? It pulls back up into that range, right? And then forms up the same reversal patterns that we are expecting, or we are familiar with, right? And then it's already showing that what within that range the market is going to reverse from the top there. Then you'd have like more like a double top situation like this. And these are like the classic type of trades that I would like go all out for the most part. For the first one, you'd not get me going all out, but for the second one, right? And that's similar to what happened here, right? Similar to what I was showing you, or what I have seeked to show you guys here, right? You see how the first one, it came there, right? And then it broke down. The second one came there, right? Even though it traded a little bit above the range, but you can see that it also traded above the range with a candlestick pattern, which is like the tweezer tops. And then from there, it just came down. So that's like that double scenario that I'm giving you. So usually you have that also happening in the market, right? Where like it trade up to a new high, it comes down, goes back into that range again, right? Then suddenly the patterns repeat itself, and this is where you want to make the most money. The first one, you'll be a little bit skeptical because you don't really know if it's actually going to, but here you can tell that it has happened already before in that range, so it could potentially happen again here. And indeed you were not wrong, it happened. So you must make like a good killing there. If you don't make a good killing there, then you're just letting market opportunities continuously pass you by. It's not 0.01. Don't buy Lamborghini Huracan Evo Spider. That's just by the way. So if you understand the logic that I'm sharing, then that is like a similar example of what I'll do here if the scenario plays the same. But in the meantime, for the first time, I'll just want like the patterns there, and then if it makes sense, then I'll just like trade like that. So I already told you guys that don't go too ahead of yourself in the market. When I say don't go too ahead of yourself, I say don't make too much speculative judgment, like the market will come here and go down here and go here and come here. Some people last month I said it on the live stream that you don't want to go too far ahead of yourself. So at least two speculative judgments. You're expecting price to hit here, reverse here. If it reverses here, we'll see where we'll go next. So let's at least first monitor this one. So that's like my analysis, intensive analysis for gold for you guys today. I hope it makes sense enough, right? And our time is already up, right? But for the love of you guys, probably see if we can skim through a few of the other charts before I leave here, right? I've kept my eyes on GBP USD as well, and I particularly had interest in seeing how the market was going to play around here, because I expected it to also like reverse here, because like you see this rally, huge drop, which was also a factor of like the geopolitical events and happenings and ongoings, right? So I didn't expect the market to break up here, but suddenly that it has broken up here. It has changed my perspective and bias, because yesterday it was looking very beautiful and clean for a potential setup. It was looking something like this, not actually like this. It was even looking like this, right? So imagine that you came to see GBP USD looking like this, right? That's the first thought of process would be, okay, are we going to have a solid reversal pattern such that we will short it like that, right? So it didn't happen, so I'll leave it where it is now. There's nothing, right? So in trading, I always tell you that do not try to solve the most difficult question, right? And I've said this times without number. So many traders, they come into the market, they're trying to solve the most difficult question. What I mean is that, like, yeah, I really don't know where it's going, but suddenly you're trying to find a reason to buy or reason to sell. You know, that means that you are in an exam and you're trying to solve the most difficult question. And I've made this a joke so many times where, like, traders, imagine like you're in a classroom and then let's say you're solving 3 questions. The teacher said all of them carry equal marks. The first question is 1 plus 1, and the second question is 2 minus 1. Then the third question is, let's say, x minus y plus 2 raised to the power, let's say, raised to the power 4. And then they say that this one equals 10 marks, and you are supposed to answer only one. This one also equals 10 marks, and this one also equals 10 marks. A lot of traders, a lot of you guys, where is it? Where's the text? All that I wrote is missing. Can you imagine? A lot of you guys are fond of answering the difficult one. True or false? They said only answer one. I've given you that example. All that I wrote was missing. How come? Strangely enough, a lot of you are fond of answering the third one. Why? It's a question I'm asking you guys now. Like, why? You have to answer the why today before we leave here. Why? Like, the question is why. Do you know why I'm saying that? Because we have so many instruments to trade as traders. We have so many instruments, you know. So if GBP/USD is not forming logic around your technical analysis, ignore it and go to the one that is making sense. But no, traders want to still find a reason. Let me find a buy, let me find a sell, let me look at it, then you take an L. Then you say, trading is difficult, I'm suffering with the market psychology, the market is behaving some way, my strategy is not working. No, it is you, oversabi. That's what somebody just said, a tribal trends. Oversabi. It's oversabi. Oversabi, they do a lot of traders. Oversabi in Nigeria means like you think you know too much. You know, no, that's not how it works. It doesn't work like that anywhere. You have to look through the market and find the logics that work around your strategy, and then you trade them. So hopefully this becomes like a major learning curve for you. You know, so now looking at GBP JPY, similar logic. You know, it didn't necessarily trade as much as GBP USD in terms of that formation, but I think the USD factor is because of the USD as a cross pair, right? So if you watch here, you can see like this pattern forming here, right? So what I would expect with GBP JPY is that maybe at one point this chart pattern is going to break and have GBP JPY continue trading downwards. And when it's trading downwards, where is it going? It will also be important to find that potential level, which is here, right? So when it traded lower, it had potential of hitting there. It didn't hit there. That's something that the market does. It will come as if it's come to hit there, and those that chase take profit would be waiting that come and hit. They'll wait. They never hit, and then they get disappointed because the market will just come back and put them in a drawdown, right? And what happens is that when it happens like that, then the next formation, it will form like a chart pattern and use that as a more catalyst to drop up to that level. So I would expect that if GBP JPY should break down, then it'll probably make it way to that level that it failed to absolutely and succinctly touch in this era. Right? Somebody kept mentioning GBP CHF. What's happening with that one? What's happening with GBP CHF? That the person was mentioning it so much. Okay, it's not looking bad. It's not looking bad anyway, right? If you look at GBP CHF, but in the mid range like this is not a level that I'll trade per se, right? All I'll do is that I'll mark up like my level like this, and then I'll even perhaps mark up this level, right? And if you mark up this level, you can clearly tell that what in terms of Fibonacci, right, we had 0.1, 0.2, pull back into the 5061.8, and then it's making its way up, right? Now upon making its way up, are we going to revisit like this level, right? If we make our way to this level, then we'll repeat the same thing, which is what, take our time, see how the market is going to behave around there. But where as it has taken off already, then it's a little bit risky to want to chase the market at that point, because see, the pips is not something that we can absolutely like ignore, right? It has already left that range, and it has left with how many pips? It has left with almost 30 pips. So anybody who thinks that it's wise to chase the market, this is like your potential risk to reward. You're going to have to put your stop loss where stop loss needs to be, which is like beneath the range, and your take profit here, right? Does this make of a good risk to reward? No. And you cannot set your risk subjectively. Setting your risk subjectively means that you're putting it where you feel like you can accommodate, right? And that's the mistake so many traders do. You could be right with the direction, but you could be wrong with the timing, such that there could be suddenly a small wick that will wake you out before this thing goes up there. Then be like, I had this right, you know. So don't be the I had it right type of trader when they are already suffering losses in their trading account, right? Because the right place for a trade entry like this to put your stop loss is here, and the risk to reward doesn't make sense. So it'll be better you do what? You ignore. Remember what I just said to you guys. Do not try to solve the most difficult questions, right? And I saw some setup on one of the instruments as well, which is already kind of playing out already. I think it was Eurocard. No, it was not Eurocard. Was the Euro JPY? Okay, this is I think probably be the Eurocard, but I'm watching on the daily time frame. Let me come back to like the 4-hour time frame. What instrument was that again? I think it was, yeah, it was Eurocard, right? So I had just, you know, marked up a few ranges here like that, and you know, this one, the whole weeks, they're not the most conducive to find a trade setup. But once it started trading sideways, I kind of picked up this minor pattern that was going on here, right? This was like something like, just my eye could not resist seeing this, and I expected that it was going to break out, and indeed it just broke out. So from here to here, a quick, and that's a very tiny pips, not even up to 10 pips, but you know, whatever it can do for you. But right now, I don't know, maybe now that we are back to that level, we want to see how the pattern, the candlestick react around that place, then we'll find a potential position. You know, I'm running through the most random instrument for you quickly before I leave this live stream, because our time is literally up now, you know, but I'm just doing this for the love of the community. But the most important one that all of you were really asking for was the gold one, and I think that we've broken that down perfectly. So you guys should be excited about that. There's Euro USD. A lot of you also trade Euro USD as well, right? So Euro USD and GBP USD, they have like the same type of behavioral pattern, right? What I want to see right now, let's go to like the daily time frame. If we watch the daily, what can we observe? We can pick some level from here, you know, and this level is very important. And I kind of remember that this was just when this drop here was just within the same time frame when Russia Ukraine thing started, right? And then we can now come back to like the 4-hour time frame, and with that level marked out, I would expect that GBP USD will continuously trade around here, right? Why am I saying all the USD crosses will continuously trade there? Because of what I'm seeing in the XY, which is a dollar index. If you look at it now, can you see it? So with the way the dollar index is behaving now, it's like nothing is showing a slowdown for a continuous sell-off, right? Let me in fact switch to like the daily time frame, right? And we're actually in a very important region for the dollar index, right? You can see here, like this support level here, went back up, traded above it so many times and back there, right? But when the support level is not going to hold, you start seeing the signs, right? If you're watching on a daily, it might not be so clear, but on the 4-hour, you can see, right? It's making waves. It's making waves for a breakout, right? You can see here it kind of formed this type of a triangle pattern again. So there's been so many triangle patterns in the market in the last, let's say, 72 hours. So broke out a little bit and then traded back into that range. So what I could expect if anything happens and there is a free fall again, which can likely happen because like we're in a very uncertain moment, right? But this level is very tricky, right? Even me, I cannot absolutely just expect that it will drop, right? But we all have to be wary around this region because whatever happens here is what is going to define the next directional movement of gold, GBP USD, Euro USD, and in fact all USD crosses in the next week, 1 week, 2 weeks, or 3 weeks. Because now if I go onto the daily time frame, right, and then let's say this one actually, the XY actually breaks that region, right? There are a few potential ranges that it could test. You know, we have just one here as well, but all of this I'm on a daily, so it doesn't look like it's a lot of like movement, but it is a lot of movement when I now suddenly come to like the 4-hour, right? You see, for the XY to move from here to here, it's a lot of movement for the other crosses as well. So we'll keep our eyes around here. We'll observe if there's like any change in pattern, candlestick, directional movement, then we'll use that to inform our decisions around the rest as well. Guys, this is where I end the live session. I hope you guys learned a lot. I hope you guys loved it, and I hope that I broke down an instrument that is very important to you. If you loved it, I mean, I'm just waiting for a few accolades. How did you find the lesson? What new insight did you learn? Did you love it? Are you looking forward to the next one? What is a new thing you're looking up to? Just share with me in the next 1 minute, 2 minutes, then I'll say goodbye to you guys. But yeah, I think we've done justice with being able to break down gold, and then you can clearly see that we are making history together. For the first time, gold is literally approaching the 3,300 region. Now, I didn't say ask me questions because we are done, but I'm just saying that what new thing did you learn? Did you enjoy the session, and how did you find it? Great insight, thanks, very good. Looking forward to the next one. Great insight, amazing. As far as we're having a good feedback, that's the most important. Right, so guys, this is where I call it all. Can you refer a book? I'm the book. I'm giving you the book. You don't need any other book again. Trust me, I am the book. So follow me and you gain all the knowledge you need. The books are half baked. I'm giving you the full bakery, and you want half baked bread. No. Love the way you break down all the analysis. You think trading has become a little bit different? Indeed, a little bit in a way. You have to be very aggressive and informed, especially informed, right? All right, guys. Thank you so much for joining this live session. I'll see you guys in the next one. Peace.